Hello, Facebook. We are live right now. We just had this live be shared to all of our profiles. We thought it would be a good idea to come on and share with you what's happening in the real estate market today. If you're watching any news right now, you're seeing that the sky is falling, as they would say. But us professionals who are doing this for a living, we may have a different viewpoint on that. And I think it's really important for any prospective home buyer, home seller to really understand what is actually available in terms of opportunity, because in any down market, there's opportunities everywhere. It's not a good market. It's not a bad market. It's the market. And for us as professionals, it's our job to really educate you guys and really help you make informed decisions for your future family, your future decisions, your future goals. And, we talk with clients every single day. Myself, Saeed Hamoud, my brother, Ramsey Hamoud, we have about 20 years collectively in mortgage and finance. Moretta Dutch and Melanie Hawkins have nearly a decade of real estate experience. So we know what's happening, and we know that this market won't last forever, but we can always share with you exactly how to take advantage of the opportunities that are available today. 6 months ago, 8 months ago, if you owned a home and you wanted to sell it, it's a great opportunity to sell and make a lot of money. Today, if you're a home buyer, it's a great opportunity to take advantage of a buyer's market where you can get the seller to cover a lot of costs for you that you otherwise would be paying on your own. So really today is to talk about the opportunity of a particular feature that we're talking about quite a bit in the mortgage world. And we're starting to see a lot of real estate folks like Moretta and Melanie actually provide this as a tool to help buyers reduce their mortgage payment, and for sellers, if they're getting lowball offers, to help them net and make more money at the end of the day. So we're going to talk about what's called a temporary interest rate buy down. And many lenders will offer different variations of a temporary buy down. Here at Cross Country Mortgage, the company that my brother and I work for, we offer 4 different types. We're going to talk about one in particular, which is called the 2-1 buy down. So Ramsey, I think we should just get right into it. Then afterwards, we can kind of ping pong along and ask each other questions and share a little more with the audience if any comments come in. But I'm going to have Ramsey share his screen. He's again over 18 years in the business. He's going to share his screen and talk through what is a temporary buy down, how is it used when you actually get a mortgage, and what are the benefits for the buyer and also for the seller as well. So take it away, Ramsey.
All right, thank you, Saeed.
Of course.
All right, thanks for the introduction. So as Saeed had mentioned, today we just wanted to kind of come on collaboratively and explain what the temporary buy down is. It's sort of a new, it's new to this market, although it's not a new feature. Buy downs are typically always prevalent in markets where interest rates have risen, okay, because it's an opportunity for people to get a temporarily reduced interest rate. And so myself and my team have been out there pounding the pavement, meeting with realtors at offices, doing leveraged meeting events, and just kind of sharing the knowledge, because we really got to get the word out there on what this all means and how it can help buyers save money, and it can also help sellers save money as well. So Saeed, I'm going to go ahead and share my screen.
Okay.
Okay. All right. You guys able to see that?
Yeah, I can see it.
Perfect. All right, so temporary buy downs. I'm not going to go through this entire presentation. This is the presentation I put together that I usually will go over in person at realtors' offices. But for this webinar, we'll cover just a couple of screens here. So what are the top concerns in the market today? They are affordability. Affordability is huge right now. Why? Because we are dealing with high home prices. And what has caused the high home prices was very low historic interest rates for a long period of time, right? We had rates that were in the twos, 2.5%, 3%, which caused
Good times.
a frenzy, a buying frenzy.
Yeah.
And home values continued to rise. And that was followed by intense inflation. And that's where we're at today. We have really high inflationary period. So, you know, home prices are coming down steadily. In fact, actually kind of quickly. We did see them come down, but they're still fairly expensive, right? Especially when you combine that with high interest rates. So mortgage rates are up right now on purpose because the government is trying to combat inflation. They're trying to get inflation under control. The cost of goods and services, gasoline, anything out there is just really expensive, and we are feeling it on a daily basis. Okay, so we need to get that under control. They're going to do that with interest rates. So what does this all result in? It results in higher monthly mortgage payments for people. All right. So, you know, to the average buyer at first sight, this is sidelining people. People who are interested in buying, they're saying, hold on a second, interest rates are high. It's going to mean I'm going to have a higher payment. I'm going to wait. Well, I'll tell you that's not a good thing to do right now. This is an opportunity right now. When interest rates are up like this and home values come down, this is the time to buy, despite what rates are. And the buy down features are a vehicle to help you combat that high payment that these interest rates are causing. Okay, so we'll get into that right now. So what is a temporary buy down? Temporary buy down is actually a loan feature. It is not a loan program. And I want to reiterate that because I hear this out in the market a lot. People are saying, you know, do you have that loan program, that buy down loan program? It's not a loan program. It's just a feature that's tacked on to a loan program. So it can go hand in hand with a conventional loan, a government loan, such as FHA or VA. So a buy down is a reduction in the interest rate through which a home buyer gets his or her interest payments temporarily reduced for 1 to 3 years in exchange for an upfront deposit paid by either the seller, builder, or the lender. The borrower is still required to be qualified using the final fully amortized interest rate, and this is not an ARM loan. So don't get confused. This is not an adjustable rate mortgage. What this is it's temporarily buying your interest rate from, let's say you qualify at 7 in today's market. If you were to do a 3-2-1 buy down in the first year, your interest rate would be 4. Okay, and the second year would be 5, and then the third year would be 6, and then the fourth year it would be 7 because that's the rate you qualify for. So that's a 3-2-1 buy down. It's giving you a reduction in that interest rate, and the cost for doing this is paid by the seller, not by you. Okay, so that's why this is such a good opportunity. You can not only get your home at a discounted price right now, but you can also get the seller to pay for a temporary buy down. And the good thing is for the sellers, the cost of paying a buy down for your buyer is actually less costly than dropping your sales price. And that's what we're seeing happening right now in the market is a lot of agents are just simply reverting back to what they know, which is just the strategy of dropping sales price to move that home. There's a better way to do it, and it's the buy down. Okay?
Nice.
So loan types it works with, it's going to work with a primary secondary home. It's not going to work with an investment property. It's going to work with conventional and government-backed loans like we just covered. And this could include a construction loan or a renovation loan. You can even do a buy down with that. It's going to work for purchase loans only, 1 to 4 unit properties, including condominiums. It's not going to work for manufactured homes or 3 to 4 unit Freddie Mac Home Possible loans. So what is a Freddie Mac Home Possible loan? That is a 3% down conventional loan through Freddie Mac. Okay, if you're a first-time home buyer. But that would work. It would work with a 1 unit Freddie Mac Home Possible loan. Okay, just not the 3 to 4 unit. And again, it's not going to work for investment properties. All right, so why consider using a buy down? So for buyers, you get a reduced payment shock. What is payment shock? Let's say you're living at mom and dad's house in the basement and they're charging you only $500 a month. Now you want to become a homeowner because you've been saving your pennies and you're going to go to a monthly payment of $2,200 a month. Well, you're going from $500 to $2,200 a month. That's payment shock. A buy down reduces that payment shock because it's going to give you a lower monthly payment and allow your payment to gradually increase over the years, which is awesome. All right. It's going to give you, well, when you buy a house, you have higher and new utilities, right? You're likely getting a bigger living space than you were living at before. The cost of heat, electricity, everything's going to be more expensive. The cost of home ownership isn't cheap. You're going to have new appliances. You're going to have to fill up that house with furniture. That's the cost of home ownership, right? And then it's better than paying points. Now, I want to touch on this just briefly. Points are a good thing to pay for when interest rates are lower than where they're at right now. Okay. For example, let's say today's going rate was 4.5%. But if you paid 2 points, you can get it down to 3.5%. That's great. Pay the 2 points. You're going to keep that 3.5% loan for 30 years, and you're probably not going to want to refinance it because it's at 3.5%, right? That's not going to work in this market. Rates today are like 7. Okay, the cost to buying your rate down 0.5 point or 0.75 point is going to cost you maybe 2.5 points. And that's only going to take you from 7 to maybe 6.5. So when rates come down again in the future, in let's say 1.5 years from now or 2 years from now, you're going to want to refinance that loan and get into that lower interest rate. And all that money you spent on points is wasted. Okay, that's not going to be the case with the buy down, and I'll tell you why here in a moment. So for sellers, the benefits is you offer your buyers a reduced interest rate, right? It's going to attract more buyers and it's going to help sell your home faster. And it's less costly to do a buy down than to just continually reduce your sales price. And this can be used in conjunction with a price reduction. Often your realtor will say, well, we want to do a price reduction because we want your listing to show that we reduced the price and it's going to refresh in the MLS. That's great. We can do that. You can do that in combination or in conjunction with the buy down offer as well. Okay.
Awesome.
All right. And then lastly here, important facts. The funds paid by the seller are deposited into a non-interest bearing savings account for the buyer. So literally the seller is paying a chunk of money and it's going into a savings account. And what happens is that loan servicer depletes that savings account each month when you make your payment. So it's like the seller is subsidizing or paying a portion of your payment each month for you. Okay. And it slowly depletes that account in time. Now, if you were to refinance that loan before all those funds are depleted, you will actually get a refund for that balance in the form of a principal reduction when you do your refinance in the future. Okay. That's why doing a buy down is way better than paying for points right now. All right. If the loan is refinanced, you get a refund for that balance. And I'm getting some echo back in this, so I'm sorry.
Sorry, my bad.
Oh, is that you? Okay. Yeah. All right. And then, as I had mentioned, the refund could be in the form of cash back at closing. No, not as cash back, sorry, as a principal reduction. And that's a correction I need to make in here because it's not in the form of cash back to you in your pocket. It's a principal reduction. Here at Cross Country Mortgage, who Saeed and I both work for, we offer 4 types of buy downs. We have a 1-0 buy down, a 1-1, a 2-1, and a 3-2-1 buy down. If that confuses you, it's real simple. A 1-0 buy down just means that you're going to get 1% reduction on your rate in year 1. A 3-2-1 buy down means in the first year, we reduce your rate by 3%, second year by 2%, third year by 1%. It's that easy, okay? And the costs for these buy downs are paid by the seller. So you got to be working with an agent who knows what this means. And agents out there, you need to educate yourselves on what this means because you're going to be behind the curve. Okay, it's going to help you sell more listings, and it's going to help you get buyers off the fence, which they should get off the fence because it's a great time to buy right now, right?
Right.
All right. And then lastly, this just gives you an example. Let's say you bought a house at $650,000. You put a down payment down of 20%. Your loan amount's $520. The qualifying interest rate you get is 7% based on today's current rates. So if you were to do a 2-1 buy down, in the first year, your rate would be 5%, which means you're saving $668 per month. In your second year, your rate would be 6%, and you would save $341 per month. Okay, that's a grand total savings of $12,120, and that's the fee that's charged to the seller. All right. So other than that, that's all I really wanted to cover with you guys. I wanted to ensure that Mel and Moretta, you guys have an opportunity to share with everybody out there, like, how are you using the buy downs right now? Moretta, let's start with Moretta.
Well, yeah. So, the most common question right now that buyers are asking me, is it the right time to buy with higher interest rates? And because, like you said, we're not seeing historical lows anymore, a lot of them are looking for ways to purchase a home and making it more affordable for them. So right now we're seeing homes sitting on the market a lot longer compared to a year ago. And with that, buyers can leverage off what we're seeing in the current market. And I work with a lot of buyers. And in today's market, buyers are able to negotiate with sellers and ask for 3 to 6% seller credit that can be used towards buying down their rate, and which ultimately, helps lower their monthly mortgage payment and making it more affordable for them. And then, Melanie, can you touch on how offering seller credit to buyers helps sellers in today's market?
Yeah, I mean, the sellers, it's a win-win really for both sellers and buyers, because then the seller can sell their property at that higher price, and then instead of doing a price reduction. So the price reduction was what we were doing mostly in years past, but right now the key is to do this buy down so that the seller retains more of that money than they would versus a price reduction. But yeah, I mean, this is just making it all around more affordable for buyers. And so then that opens up that pool, for you as a listing agent.
Yeah. No, I love hearing that from both of you who are on the street speaking with actual buyers and sellers right now, because I'm sure the feedback is, wow, I didn't even know that this was an option. I'm sure you've heard it plenty of times, people going, wow, I didn't really know we can actually get any money from either side, the lender or the seller, right? And a lot of people think that you need 20% down for a down payment. And I mean, I think constantly in our industry, we're constantly busting myths. And one of the biggest myths right now is that we can't afford a home. And when you show them as a lender, like myself and my brother, Ramsey, when you show people how you can leverage the current market by getting a seller credit and then leveraging that seller credit for a 2-1 buy down to get to their payment goal, or what's even better than a 2-1 buy down is you can offer your clients, or what I do, I offer my clients 3 or 4 different options, because now is a time that buyers have options. Number one, they can be very, very patient. But number two, if sellers need to sell their home, they're going to offer some sort of incentive, which typically comes in a monetary form, which is called a seller credit, which is dollars in a buyer's hand, basically, that now they can go to any lender and say, hey, Mr. Lender, I have 3% of this purchase price as a credit. What can I actually do with it? And for us, my brother and I, we've been focusing on the 2-1 buy downs, but you can use a seller credit for paying all of your closing costs. You can use it for a permanent interest rate buy down. Some people decide to do that. And you can even reduce your entire monthly payment by paying your mortgage insurance up front. And most people don't even know that. Most lenders don't even know that. So I think right now, this market and our buyers and our sellers, it's all about education. So be patient out there as someone trying to enter the market, and learn about what options you have. and speak with professionals, like us, because we're going to give it to you straight at the end of the day.
That's what we're here for.
Exactly.
That's right. I think for listing agents who are meeting with people looking to sell, the buy down is an opportunity for you guys to set yourselves apart from other agents out there, right? Because the homeowner wants to know, how are you going to market my property? What are you going to do differently? How are you going to ensure that I walk away with the most money in my pocket? Okay. A lot of agents out there that aren't familiar with the buy down are simply talking about price reductions. And you could see it if you just log into Redfin and you look at a home that was listed, 20 days ago. Look at how many price reductions there were. It's like bam, bam, bam. Right?
It's almost as many price reductions as like new listings in some areas.
Yeah.
So think about that, like untapped opportunity.
Exactly. And if you are a managing broker out there, invite either Said or I out to meet with your team. I built a calculator that actually helps your agents explain the buy down to a prospective seller in the home. So I share that calculator with everyone. The calculator touches on all 4 buy down options that we have. It shows you the cost of the buy down and how much the buyer is going to be saving. So it's very valuable, and I've gotten a lot of good feedback. But yeah, I mean, if you're an agent out there, just keep pushing this, educate yourself. Use like Total Expert. We have a co-branded marketing platform where you can print out these flyers and leave them in your listing, right? That's a good way to educate people.
Yeah, and I'd say if you're looking to enter the market as a home buyer, reach out to any one of us and get on a phone call with us, shoot us a DM, shoot us an email. We'd be happy to explain, how this would work in your particular situation, because at the end of the day, life circumstances trump everything, right? It don't matter if rates are high or low. If you need to move and you need a place to stay for your family, that's just what the reality is, right? So if you need options, make sure you speak with someone who can give you options and who knows those options. So we'd be more than happy to talk through those specific scenarios with you, because everyone has a little bit different payment goal. Everyone has a little bit less, money in the bank or more money in the bank. So everyone's situation is going to be determined by your particular situation. So everyone's going to have that opportunity to speak with one of us, whether you're looking to buy, looking to sell, or needing a loan for a new home. We'd be happy to help you guys kind of navigate the murky waters, as they would say. I would just say right now, keep your eyes and ears, away from the news, because the sky is not falling over here. We're still selling homes. We're still helping people buy homes, and business is still continuing. It's not going to last forever. So just keep your head up and just know, like what we said, there is options out there, and this is a prime time opportunity. And as some great investors would say, when there's blood in the streets, that's when you want to be greedy. And right now, people are scared. People are scared that, the economy is going to crash and burn. But this is a time, if you really want to take advantage of one of the biggest asset purchases in your life, you can do it at a discount. So keep that in mind. And does anybody else have anything else to share as we wrap up?
Yeah, I thought, it'd be good for maybe Mel and Moretta to share what markets they mainly focus on
Sure.
as agents.
Okay. I'm mainly in Snohomish. I do, and King County. So, but mainly Snohomish. And Melanie?
And probably like South King County, Pierce, and Kitsap too. So yeah,
We're all over the place.
we cover it all.
We do.
All right, so we got Western Washington covered. So myself as a lender, I cover the entire state of Washington, but I'm also licensed for Oregon, California, Arizona, and Texas. So I'm going to be sharing this live stream with agents who are probably in Texas and California, maybe in Arizona as well. But with lending, it's a little bit easier we can kind of do loans all over the place. So the buy down does apply to you as well.
Well, my brother's got a couple more states than I do. I just have California, Texas, and Washington. So he's a little older. I'll give it to him. It's fine. But,
It comes with the pedigree, brother.
So for those of you guys watching at home, I appreciate you listening to us, and hopefully you got some good value from this. If you do, and you did, please share it with any agents or any prospective home buyers or home sellers. We'd be super grateful, especially in a time where business is slowing down for a lot of people in the industry. So if it was helpful for you guys, please do share this on your profiles, and we'd be happy to have those conversations with you or anybody else who's looking to enter the market. So thanks for hopping on this late, and I hope you guys have a great day and have a great rest of your week.
Thank you, everyone. Have a good evening.
Bye.
See you later.